Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the S&P 500 for the trading session dated Tuesday 19th of November. I'm recording this video 4:40 in the afternoon, Tuesday the 19th Eastern Standard Time, just after New York's closed. We got some more downwards movement. I was expecting that a little fourth wave correction was not over. That was correct and prices moved lower. It didn't turn out to be a flat, although there were several structural possibilities. A zigzag was the least likely, but that's what it turned out to be. I expect now that we have the end of this little fourth wave correction. It's lasted 2 days. Its counterpart, second wave, also lasted 2 days, so they're beautifully in proportion. I'll be expecting 2 to 3 days of upwards movement towards this target now. At 1826, minor wave 3 will reach 0.618, the length of minor wave 1, and also exactly at the same price point, minute wave 5 within minor 3 will reach equality in length with minute wave 3. So that target now has a higher probability. I'm expecting it should be reached in about 2 or 3 days. When we have the end of minor wave 3, I'll move the invalidation point up here to the high of minor wave 1, and we'll expect a fourth wave correction to last about a week or so, which can't move back into wave 1 price territory. When that's done, we'll expect more upwards movement towards the final target. At 1864, intermediate wave 5 in its entirety would reach equality in length with intermediate wave 1. This main wave count is quite bearish. It sees cycle wave B upwards unfolding as a zigzag, and when it's done, it expects a new trend downwards at cycle degree for a C wave, which should take price substantially below 666.79. The bigger picture for the main wave count sees a big expanded flat unfolding for a big supercycle second wave. The maximum common length of B waves within flats is between 100 and 138% the length of the A wave. This B wave at cycle degree would be 138% the length of its counterpart A wave at 1858.03. So if it moves beyond that, it's longer than the maximum common length, which reduces the probability that a flat correction is unfolding. Above this price point, I will swap over my monthly wave counts, and I would expect we're more likely in a very long-term bull market to last probably at least another 4 or 5 years. Let's have a look at what's happened with this little fourth wave correction on the hourly chart, where it starts here, is this point here. So I've checked the subdivisions here on the 5-minute chart. I was expecting that we had a 3, we'd have a 3, 5 for a flat correction most likely, so that the fourth wave showed alternation in structure with its counterpart second wave. That's not how it subdivides though. It subdivides as a zigzag. We have a 5, 3, 5, and I've checked that on the 5-minute chart. This C wave is close to 0.618, the length of this A wave. There is still alternation within these structures. I've seen this happen before. This fourth wave has a short C wave and a long A wave in a zigzag, and the second wave has a short A wave and a long C wave in its zigzag. The fourth wave here is shallower. This second wave is a 47% correction of the first wave, and the fourth wave is just over 0.382, the length of the third wave. So there is still alternation. I expect it's extremely likely now that the fourth wave is over, because it's nicely in proportion to its counterpart second wave. There's a little overshoot of the channel. I'll expect price to get back in the channel and stay there, either ending midway in the channel or about the upper edge, depending on how steep the fifth wave is. The target at 1826 should be met in 2 or maybe 3 days, depending on the slope of this fifth wave. Until we have a nice clear 5 up on the hourly chart, which we'd see with the first wave of minute wave 5, once we have that, then I will have confidence that this fourth wave is indeed over. While we don't have that, I have to leave the invalidation point down here and admit to the unlikely possibility that the fourth wave could continue further. If it did, I'd expect it to mostly move sideways and just take up time. If it continues, it can't move into first wave price territory below 1773.44, but like I said, because of the proportion and the structure being complete, I expect it's very likely that it's over here, so I'm expecting upwards movement for 2 or 3 days to 1826. At the daily chart level, this is the bullish alternate. It expects that we started on a new bull market back at 666.79 at cycle degree, which should last 1 to several years. It's lasted 4.5 years and it's not yet close to the middle, so it's probably got at least another 5 or so years to go. The targets are the same, the expected direction is the same, and when we have the end of intermediate wave 1, we'd still expect a big trend change. Both wave counts would expect downwards movement. This one should breach the lower edge of this big blue channel, so it's quite a lot of downwards movement. Careful attention to the structure of that downwards wave when it finally arrives will give us a strong indication as to which wave count's correct. At this stage, that bullish wave count is starting to look more likely. But until we have movement above 1858.03, I'm going to stay with the bearish wave count as the main idea. It does have a better fit with the bigger picture. So I'm expecting upwards movement for 2 or 3 days to 1826. When we've done that, I'm expecting a bigger fourth wave correction to last at least a week or so. That's all for me today with your S&P analysis, and I hope that all our members are having a most fabulous day.